Good morning. What is the meaning of money? As we discussed earlier, currency is anyway a form of money. Then monetary policy decides that how much money should be there in the market. How much money should be there in the hands of the people? Is there any problem if there is too much money in the hands of the people? Yes, what is the problem? Inflation. What is the problem if there is inflation and again too much money is there in the hands of all the people? Is a problem? Imagine you are getting only 200 rupees per day wage. Your earning per day is 200 rupees. When you are going to the chicken shop, shopkeeper is telling that 50 rupees per kg chicken. Are you happy? Yes. You are earning 200 rupees per day, and when you get to the shop, the shopkeeper tells you that today's price for chicken is 50 rupees per kg. Now another situation I am telling, inflation. You are able to earn 200 rupees per day. When you go to the chicken shop, shopkeeper is telling that today's chicken price is 300 rupees per kg. Which situation you want to live in? Either 200 rupees per day wage and 50 rupees per kg chicken will be available, 2000 rupees per day earning and 300 rupees per kg chicken will be available. Which one you want to live in? First one is deflation, second one is inflation. Inflation or having too much money in the hands of the people is not a problem if everybody has too much money. Problem happens only when few people have too much money and they are purchasing whatever they want from the market. Because of that the price is going up, because when there is a demand in the market, people have money, people will purchase the items from the market, automatically demand increases. When demand increases in the market, definitely the price will also increase. Then only few people have the money, they are creating demand in the market and the price is going up. Majority of the poor people are suffering from inflation, then it is dangerous. Otherwise, many countries have the inflation. Do you feel that 1 kg onion and 1 kg tomato in India and US will have the same price? No. Definitely where the price will be high? In US, the price will be high. 1 kg onion, 1 kg tomato in India and Dubai market will be same? No, it will be definitely higher. And why? Because the inflation is there, because everybody has the money and everybody is ready to spend any amount of money up to a certain extent for tomato. In India, why we are fixing sometimes the tomato price maximum goes up to 60 per kg, because that's the maximum buying capacity of an average Indian. Sometimes in Dubai market or in the Qatar market, and 1 kg tomato might be sometimes 300 to 400 rupees per kg in Indian money, and 10 dirhams means 200 rupees and 220 rupees. I have an uncle and I went to Qatar, because here he has a big house and he drives a BMW. When I went to Qatar, I have a desire to see that what he does there to earn this much money, and he invited me for one day dinner in his place. After that, he has shown me his shop. His shop was a small sabzi shop, and almost half of this room will be the size of the shop, and 4 employees were there, and huge rush was there. And because it was the residential area of the rich Arab people, and they are coming and they are taking 4 people were managing all the customers, a small sabzi shop, and he earned that much money that he has huge property in Kerala and he has a big house in Kerala. He drives a BMW in Kerala. By selling sabzi here, can we purchase an auto rickshaw? That is a difference of having and living in an inflationary society, in a non-inflationary society. Inflation is good if it is. Inflation is good if the benefit of inflation is distributed among all the people. In India, the problem is that whenever inflation happens, beneficiaries are the few rich people, and the people who have to suffer from inflation are the large number of poor people. And eradication of poverty is the best way. Is it practically possible that in Dibrugarh, I only should be the rich, all others should be poor? Practically impossible. And for me to be rich, you have to be rich first. Then you should pay the fee here, only then I will get the salary. And if you don't pay the fee, I will not get the salary from Academy of Civil Services. For that means, if that way large number of rich people are, the number of students will increase, then only I can demand I should be given more salary when the number of students are increasing. That is why for me to be rich, everybody living around me should be rich. And for me to be poor, only one thing is required. Everything who are surrounded to me should be poor. Then monetary policy in India, why we are sometimes controlling too much availability of money in the market, because large number of poor people are there. If money becomes too much available, then inflation will happen. What does it mean by inflation? Inflation means that persistent increase in the price of the goods and services. Continuously, the price of the goods and services is increasing. That is called as inflation. Mainly when it happens, inflation might happen because of multiple reasons. Sometimes people are poor, still inflation is there. Sri Lanka. People have no money, still inflation is there. That happens because of an economic crisis. During COVID-19, all of us were in lockdown and we had no earning. That time also inflation was there in India. If the supply reduces, inflation might increase. And if money increases, inflation might increase. There's one problem, one way inflation increases is that money increases in the hands of the people. When we have too much money, will you have the value for money? No. When you have too much money, imagine your father is super rich person in the area and he gives unlimited money for you. Whenever you are asking your mother, I'm going to the college or the coaching center, can you give me some pocket money? She puts the hand in the wallet, whatever bundle of 2,000 comes and gives you. Imagine so. Then what you will do? Every day, you will take your friends to Flourish and coffee and you will sponsor. And after the class, once in a week, minimum, you will take all the friends into any multi-cuisine restaurant and ask them, you eat, I will pay. Because when money is there, value for money, when too much money is available in the hands of the people, value for money decreases. When value for money decreases, they will have a temptation to spend unlimited money. When unlimited money is spent, the demand for the goods and services in the market increases, then the price also increases. That is why there is now another problem. If money is less, deflation. One problem is inflation. When money is too much available in the market, inflation happens. Now, very less money is there in the market. What happens? What is the opposite of inflation? Deflation happens. There is no money in the market. Imagine, I am the producer of this water bottle. I want to sell it in the market. All of you are poor. You are my market. All of you have no money. You are poor. I produce 1,000 water bottle, then I want to sell to you for 25 rupees. As all my customers, the target group is poor, nobody is purchasing this water bottle. Then after some times I reduce, because somehow I wanted to sell it, I reduce the price into 20 rupees. When I reduce the price into 20 rupees, still people are not purchasing. Then again I reduce the price into 15 rupees. Again, people are not purchasing even after reducing the price into 15 rupees. Then again, I reduce the price into 10 rupees. Then also people are not purchasing because people are poor. Then what I will do, I will stop the production of this. And instead of going into loss, whatever 1,000 I produce, I will sell somehow and I will stop the production. When I am stopping the production of this one, already in my company, 10 employees were recruited for production of this water bottle. They will lose the job. Unemployment will be created. Yes. When deflation happens, production reduces and unemployment increases because the producer loses the interest in the market. The producer loses the motivation in the market if there is too deflation. That is why deflation is also dangerous. It will create unemployment. It will make the GDP of India going down. Inflation is also dangerous. the poor people will be hurt and they will not be able to survive if there is high inflation. Hence, the money availability, especially in Indian markets. In Indian markets, the money availability should be moderate, not too high, not too low. If it is too high, then inflation. If it is too low, then deflation happens. RBI makes the policy on how to make the money available at a moderate level in the market, at an optimal level in the market. The policy for that is decided by the Reserve Bank of India. That policy of Reserve Bank of India that decides how much money should be available in the market is called as monetary policy. Now you might have a doubt. How RBI can decide how much money should be there in my pocket? Is it possible? I have money. I will spend my money as I wish. Is it possible for RBI to decide that how much money I should spend, how much money you should spend? Practically possible or not? Yes, possible. Imagine that I am RBI. All of you are the people. You have too much money. Then I want to reduce the money in you. Whether I have any way, in your opinion, you have too much money. Everybody became super rich and everybody is earning 10 lakh rupees monthly and going to the market from early morning till evening every day doing the shopping only and you are creating the demand in the market. Now imagine how I can reduce the money in your hands. I am increasing the interest rate. When I am increasing the interest rate from the bank manager is calling you and telling you that dear customer, till yesterday, if you are depositing 10 lakh rupees with my bank, interest rate was only 7%. Today, RBI has increased the interest rate. I am ready to offer you 10% interest if you are depositing the money with me. Will you go and deposit the money in the bank? Then money reduces in your hands. You are going and depositing money in the bank. Next month also when you are getting salary, you feel that when there is a good offer to deposit money for my future, interest is high now, let me deposit the money. Whether RBI is reducing money in your hands. Now can RBI increase the money in your hands? Everybody is poor, imagine. And you don't be poor, imagine as poor. And everybody is poor, you don't have money, you don't have a job. And you are feeling that I don't know how to move ahead in the life and there is no money to purchase my essential commodities. Then RBI is coming and telling you that interest rates are reduced now. Then from the bank you are getting a call. Do you want to have a loan? Now RBI has decreased the interest rate for you. Will you take the loan if you have a necessary? Then during deflation, RBI will reduce the interest rates. During inflation, RBI will increase the interest rates. Did you get that much at least now? This is the basics of the monetary policy. What is the solution for deflation? Decrease. Decrease. And solution for inflation, I increase. Easy to remember. If there is inflation, as a solution for inflation, RBI will increase the interest rate. Because by increasing interest rate, two benefits are there. One, you will deposit those who are rich. Imagine this side was rich. You will deposit the money with RBI. This side was poor. And then you will not take any loan. Poor people want to take the loan. Rich people want to get an opportunity to deposit money. When interest rates are increasing, those who want to deposit money will deposit. Those who are poor want to take the loan. For them, when they are taking loan, also high interest will be there. Then they will not take the loan. That means no money will flow into market. Money from the market will flow into the banks. During inflation, when interest rate increases. Now during deflation, when interest rate decreases, imagine this side was poor, this side was rich. This side was rich. Every time poverty comes this side. This side was rich and this side is poor. During it, there is a deflation because majority are poor. This side is poor and there is no money. Only two people are rich in this side. During this time, what RBI will do? Deflation is there. Every majority are poor. Deflation is there. What RBI will do? You tell me. Decrease the interest rate. When RBI decreases the interest rate, majority poor people will take the loan. The minority rich people, and what they will do, they will not deposit the money because the interest is low now. They will deposit the money with the RBI only when interest is high. Then that money will stay there into the poor hands. More money will flow into the market. When money flows into the market, the problem of deflation will be solved. Then, and how the RBI, now you understood at a minimum level how Reserve Bank of India controls the money in the market. How Reserve Bank of India is either increasing or decreasing money in the market. Now we can see what Reserve Bank of India does. And what is monetary policy? Monetary policy means that the strategy of influencing movement of money supply and interest rates to affect output and inflation. Strategy of Reserve Bank of India for influencing the movement of money supply, either increasing money supply or decreasing money supply. How? By interest rates, either by increasing interest rate, during which time RBI will increase the interest rate, during which time inflation, or decreasing interest, during which time deflation. Online students, are you following me and getting exactly? Yes. Are you following me and getting completely what I am speaking? Please raise the hands. Then during inflation, increasing in the interest rate, and during deflation, decreasing the interest rate, and to affect output and inflation. What is output? Production. During inflation, high production will be there, low production will be there. High production because inflation only happening. I introduced this water bottle for 25 rupees and I produced 10 water bottle. Within 5 days, complete water bottle finished. Then I will produce another 1000 and again selling for 25 rupees. Suddenly finishes. Then I am getting motivated. Next 1000, I will increase the price into 30 rupees. Because all of your, and then again suddenly got sold. Again, I am producing more and I am increasing the price into 32 rupees. I am increasing my profit. I am motivated to produce more and more. During inflation, output will be more. During deflation, I am not motivated. Whatever low price I am giving, you are not purchasing my water bottle. I will start stopping the production and unemployment will be created for my employees. Then this is called as to influence, to affect the output and inflation. Then the aim of the monetary policy is to affect inflation or deflation or to affect output. Now, monetary policy, we can divide into monetary policy into two. One is expansionary monetary policy. Second one is contractionary monetary policy. Expansion means expanding money supply in the market. Tell me, when RBI increases, all of you listen, when RBI increases the interest rate, money in the market will increase or decrease? Online students, when RBI increases the interest rate, all of you in your hands, money will increase or decrease? Decrease because you will deposit money with the bank. Those who are in need of money, they will not take the loan now because high interest rate time, normally people don't take the loan. That means when RBI increases the policy rates or interest rates, money supply in the market decreases or contracts. This is called as contractionary monetary policy. Now, if I am making a statement, listen to me carefully. During inflation, RBI will follow contractionary monetary policy. Is it correct or not? Online students, please raise the hands. And during inflation, RBI will follow contractionary monetary policy. Is it correct? Yes, online, I can see only 2 hands. What happened? It is correct only, please raise the hands. And during inflation, obviously what RBI does? During inflation, the problem of inflation is too much money is there. Then RBI to solve the inflation, they have to reduce the money. To reduce the money, they are increasing the interest rate. Are you following me? Because this economy, we have to go in a complete connected way only. If you are disconnected somewhere, don't dream today. And if you are disconnected somewhere, you are going to some other dreams, then economy will be completely missing. Today's class, that is told then. If you understand monetary policy, all other chapters will be easy for you. And by end of this chapter, you become a mini economist. During inflation, RBI increases the interest rate. By increasing the interest rate, RBI's aim is to reduce the money supply in the market. That means when RBI increases the interest rate, the money in the market contracts or reduces. That is called as contractionary monetary policy. Now there is deflation. And unfortunately, all of you are poor. There is deflation. You don't have money. When there is deflation, what RBI wants to do? RBI wants to increase the availability of money in your hands. Otherwise, because of deflation, nobody is going to the market and purchasing anything. Sabzi wala is also in crisis. The fish seller is also in crisis because everybody has deflation. Many people lost the job and they are sitting at home. There is no money. Even the rickshaw puller is in crisis. Yes or not? If deflation is more dangerous than inflation, when there is deflation, even rickshaw puller also will be in crisis. Imagine tomorrow, if I lose the job in Academy of Civil Services, what I will do now, if I'm going out, I have job, I have monthly salary, I have enough money. When I'm going out, I need to go for Naliapur market for purchasing some 10 rupees vegetables. I will feel that, and it's too, either in the winter, it's too cool to walk, the cool breeze is coming, I'm unable to walk. And if it is summer, it is too hot, unable to walk, I will take a rickshaw and go, or Bikram and go. If I lose the job, there is no money in my pocket. While going out, I will look in the pockets whether I will go by Bikram or rickshaw. I will see that walking is healthy. Then I will walk. Then even if there is deflation in the market, even a rickshaw puller will be affected in their income also will reduce. My point is that if there is deflation in the market, that means people have unemployment, less money is there in the hands of the people. Then RBI, what they will do? By RBI will decrease the interest rate. By decreasing interest rate, you will take loan from the bank and the money availability in the hands will increase. By decreasing interest rate, you will not deposit the money in the bank. If you have money, then the already money which is in the market will stay there and more money will flow from the banks into the market. That means it will expand the money supply in the market. Hence, this policy, reducing the interest rates and increasing the money supply in the market during deflation is called as expansionary monetary policy. And if I'm making a statement, during deflation, RBI will follow expansionary monetary policy. Is it correct? Yes. During inflation, RBI will follow contractionary monetary policy. During inflation, RBI will follow, during deflation, RBI will follow expansionary monetary policy. One more term for the expansionary monetary policy is loose monetary policy. Losing the money supply. And contractionary monetary policy, another term is tight monetary policy. Tightening the money market. For example, sometimes if I'm calling some of you and telling that, my dear friends, I need to borrow some 1 lakh rupees from you. Are you able to help me? Then what automatically you will tell you, sir, I am very, very tight now. Tight means you don't have money. Then contractionary monetary policy means that tight monetary policy, RBI want to make all of you tight. And RBI want to reduce the money in your hands. Now coming into after the expansionary monetary policy and the contractionary monetary policy, these two are the two monetary policies, that is during inflation. Which one? E or C? During inflation, C or E? C, contractionary monetary policy. During deflation, online students, C or E? During deflation, expansionary monetary policy. Yes. Now, what are we can come to the material and before moving ahead, and goals of monetary policy. By monetary policy, what are the goals government has or the RBI has? One is constrain inflation, that all of you understood. And by monetary policy, RBI can control inflation or price stability, because when there is inflation, one more problem is there. Price will be unstable. You are unable to predict the price. When there is inflation, you will be able to save more money or less money. Less money, because you had a monthly salary of 1 lakh rupees, imagine. I think everybody wants minimum 1 lakh. Yes. And by the end of this class, you should be rich also. And you should have at least mentally rich. And even mentally rich, because if you become mentally rich, half richness will come. If you are getting ready to earn more, first thing is that we should be ready to earn more. If we are not interested to earn money, money will never come automatically. For that, you should take a lottery ticket. And by lottery ticket also, lotteries are there in Assam or not? I have seen very less. It is there or not? But in Kerala, it is very popular. If you park a car somewhere and people will come and do you want a lottery ticket? And if you are going in the bus, people will come and with a lottery ticket, because that is a huge, in my opinion, there is a huge employment. Selling lottery, mainly the people employed in selling lottery in Kerala are the disabled people in wheelchair, and because many people will purchase from them, because they are, for them it is a good business, because many people will purchase from them out of sympathy. The main thing is that main motivating factor is that they don't want to beg. They want to live with their own hard work, coming in wheelchair and coming in the instruments out and selling the lottery ticket. Then people will be motivated to, because more than getting the money, people feel that let me help this person. Coming into our thing, price stability. And if the inflation is there, instability of the price will be there. People should not be able to plan their expenditure if there is inflation. That is why by monetary policy, RBI wants to bring the price stability. Second one, balance saving. If there is too much inflation, imagine you had 1 lakh rupees monthly salary. Last month, there was no much inflation. You were able to meet all the expenditures for 60,000 and you were saving 40,000 in the bank account. This month, there was inflation. Then all the same expenditure, same items you purchase, but the price went up to 70,000 rupees, you were able to save only 30,000. That is why by controlling inflation, RBI wants to help the people to increase the savings. Maintain exchange rate of Indian currency. See, when there is inflation, Indian currency's value increases or decreases? When there is inflation, Indian currency's value increases or decreases? Online students, I or D? When there is inflation, whether the Indian currency's value, I or D, increases or decreases? All those who type Shubham, Sunram, Murmu, Bhargavi, you are correct. Decreases. Why? As I told you, you have too much money. Your mother is giving one bundle of 2,000 rupees when you are coming to the class today. You don't feel the value for money. And you are taking everybody into the shops and giving whatever they want. Sometimes when you see a beggar, you are giving 2,000 only because the mother has given one bundle of 2,000. When you don't have any value for money, that means we Indians have no value for money. Can you expect that international market will respect our money? When domestically Indian currency has less value, in international exchange rate also Indian currency's value is going down. That is why by controlling inflation, Indian currency's exchange rate can be maintained. Generate jobs. When there is deflation, people have no money. As I told earlier, my water bottle nobody is purchasing because you don't have money. When you don't purchase my water bottle, I stop the production finally. When I'm stopping the production, 10 employees in my company, they are losing the job. That means during deflation, unemployment will be there. By controlling deflation, by expansionary monetary policy. Yes, when I'm using these terms, are you able to follow me? Yes, and by controlling deflation through expansionary monetary policy, employment will be generated. Then economic growth. When there is deflation, my water bottle nobody is purchasing. I am stopping the production. Whether India's GDP comes down. Yes, if I am stopping production, not only me stopping production, all other producers in the market, except those who are producing very essential items. During crisis, food might have demand and the medicines will have the demand. If I am a person producing a high quality leather jacket, you don't want the high quality leather jacket now, you will go to Vishal Mega Mart, 200 rupees jacket will be enough if there is no money. When there is so much money, I can tell you all of you will be going to Vishal Mega Mart now to purchase some items. Now after some time, when you become an IAS officer, you have too much money, you will tell that Vishal Mega Mart is boring, too much time queue is there in the building and there is no proper air conditioning. Then you will go to the big good shopping malls and the branded stores because you have money. Now the point is that when there is when there is deflation, my products are not getting sold. I am reducing the production. When I am reducing the production, same way different people are reducing the production, the GDP of India comes down. Yes, that is why by expansionary monetary policy during deflation, your RBI wants to increase the GDP growth rate of India. These are the goals of the monetary policy. Now, how RBI controls the monetary policy? Using three different instruments. One is interest rates. As I told earlier, changing interest rates. Second one is setting reserve requirements. Third one is that trading in foreign exchange markets. All the three I will explain you in detail. First, let us see the interest rate. Interest rate means the first interest rate. As you know, when inflation is there, what RBI will do? Will increase the interest rate. When deflation is there, what RBI will do? Will decrease the interest rate. Now, first thing, bank rate. Coming back, presently we have 6.75 till recently. 1 week before, I think Monetary Policy Committee had a meeting. They changed it from 6.5 to 6.75%. How bank rate functions? Let me first tell you what is bank rate, how it is controlling inflation and deflation we can discuss. Bank rate is the interest rate charged by Reserve Bank of India when commercial banks are borrowing from Reserve Bank of India for long term. This is RBI and this is commercial bank and this is the people where we are living, or the market we can call. Exactly when we tell the market, commercial banks are also a part of market, but this is the people or the market where the inflation and deflation happens. Sometimes commercial banks, SBI, Canara Bank, Axis Bank, HDFC Bank, these banks, they want to borrow money from Reserve Bank of India. When they want to borrow money from Reserve Bank of India for long term means more than 1 year. When they are borrowing money, that means money is flowing from RBI into Reserve Bank of India and RBI into commercial banks. Now see, when commercial banks are borrowing money from RBI, do you expect that RBI will give the money free of cost? They will charge an interest rate. Presently, that interest rate is 6.75%. 6.75% when this commercial bank borrows 100 crore rupees from RBI, RBI tells we will give you the loan, but you should give a 6.75% as interest. How RBI decides this interest is that RBI looks here whether here inflation is there or not. And when RBI looked into the market, into us, there was inflation. The prices were going up and everybody has too much money. Then what is solution for inflation? Contractionary monetary policy or reducing the money there is a solution. Then RBI decides that from 6.75, we are increasing the bank rate into 7%. When RBI increases the bank rate into 7%, commercial banks are also getting angry. Yes or not? They are feeling that now when we borrow money from RBI, high interest rate has to be given. Then what they used to do? They will increase the interest rate for their loans also. If commercial banks were earlier giving loan for 12% and they increase the loan interest rate into 13%, then nobody will take the loan from here. That means more money will not flow from here to market. Money will not flow. RBI now, commercial banks are now thinking that while taking loan from RBI, interest rate is 7%. They were offering to the depositors, savings account depositors, they were offering only 5% interest. They thought that instead of taking from RBI for 7%, better to motivate the people here, offer them 6% now. Then RBI increases the interest rate for the depositors into 6%, for example. Then we, the depositors, will be interested to deposit money in the commercial banks. More money flows from market into the commercial banks. Will inflation will be solved? Inflation will be solved because money supply in the market will contract. Yes? Yes or not? Online students, did you understood? And how the bank rate will function as a tool of monetary policy? How the bank rate will function as a tool of monetary policy? Second thing, another situation when RBI looked here, deflation was there. After a few days when RBI looked, deflation was here. When there is deflation, definitely there is shortage of money. RBI wants to increase the money supply there. When RBI want to increase the money supply from 6.75%, they are reducing the bank rate into 6%. When they reduce the bank rate to 6%, all banks are motivated to borrow more money from Reserve Bank of India. More money flows from Reserve Bank of India into commercial banks. By borrowing and keeping money here, they don't have much benefit. Then they want to lend the money into the people, and they are lending money. It was earlier 12%. They are reducing it from 9% because here they are getting for 6%. They are reducing the interest rate for the loans into 9%. All of us borrow the money, and the money flows from commercial banks into the market. At the same time, rich people here, they are unhappy, and their interest rate earlier was 5%. Now RBI thinks that they are getting safe loan from commercial banks are thinking they are getting safe loans from the RBI. They are reducing into 4%. Then money will not be deposited in the banks. Whatever money already here will stay there, and more money will flow into the market. That will make expansion of money supply in the market through expansionary monetary policy. RBI, by decreasing bank rates, can solve the problem of deflation. Now you understood? Simple. And during in first one we were discussing the bank rate. Bank rate during inflation, bank rate increases or decreases? During inflation, bank rate increases or decreases? Increases. During deflation, bank rate decreases. Easy to remember. During inflation, bank rate as a solution for inflation. If there is bank rate, for example, bank rate, and first one, inflation situation, and deflation is another situation. The bank rate, RBI, increases during inflation, decreases during deflation. Now, rate at which RBI lends long term to commercial banks, 6.75, 6.5 is wrong, and 6.75% is the present bank rate of the Reserve Bank of India. Now see that how it functions. Bank rate, and as I told, it is 6.75, and if there is inflation, money is there with the RBI. Now imagine there is inflation in the market. What RBI does? RBI increases into 7%. When RBI increases into 7%, commercial banks don't borrow the money from RBI, and then they will not give the money to the banks. Also, more money will not flow. Commercial banks will reduce the interest rate for depositors, then money will flow from the market into commercial banks. Contraction of money will happen. Now, if there is deflation, RBI will decrease that into 6%. When RBI decreases that into 6%, definitely when bank rate, interest rate decreases, commercial banks will borrow this money, and the money with the RBI will move into commercial banks and will move into the market and will solve the problem of deflation. That is the bank rate at which RBI lends long term to commercial banks. Any revision of its signal to banks to revise the deposit rates and the prime lending rate. Prime lending rate means the interest rate charged by a bank when the people are taking loan. base rate is also an interest rate charged by the bank when the people are taking loan from the bank. Marginal cost of lending rate is also another type of interest rate charged by the commercial banks when people are taking loan from commercial banks. Bank rate is a blunt instrument and not changed usually. When there is a severe crisis, recently changed because high inflation is there in the market. When there is a very high inflation, RBI changes the bank rate. At present, bank rate is 6.75% is the bank rate. Next one, a very simple one, repo. If you understood the bank rate, understanding repo rate is an easy task. 6.5, okay, from 6.25, it has been increased into 6.5. When it increases? During inflation or deflation? Inflation, that means from 6.25, it has been increased into 6.5%. That means presently inflation is there. Now, what is repo? See, I need some money. The meaning of the term repo means ready forward contract. I need some money. I know that nobody from you will give me the money. Why? Nobody from you will give me the money because you don't trust me. And in money matter, there is a common thing. People don't trust the other persons. Do you trust me or not? Yes or no? Then I am giving you a task. Imagine you have 2 lakh rupees with you. You have two options. I am also a private person. Nearby there is an Axis Bank, that is also a private company only, not a government company. Will you deposit the 2 lakh with me? I am giving you an offer. You can deposit the 2 lakh with me. Like you are going to ATM, anytime you can ask me money, I will give you 2,000, 5,000, whatever you want, I will give you. Axis Bank is also owned by another private person like me only. He is also telling me, you can deposit the 2 lakh with me. Anytime I will give you a card, you can go to the ATM and withdraw money. Now tell me honestly, will you deposit with Axis Bank, another private company? If it is SBI, I can tell you it is government. You can trust more. Axis Bank is also a private. I am also a private. Will you deposit the money with me or with Axis Bank? Axis Bank. That means you don't trust me. Yes. And you trust. Otherwise, you are trusting more than me, the Axis Bank, because they have the license from RBI. They have the ATM. They have the facility, you have a confidence, your money will be safe there. For me, there is no recognition of RBI. And if I am disappearing into Kerala, then you will have to come behind me in the other flights to get your money back. Hence, I need some money. I know that you don't trust me, you don't give me the money. I am giving you one offer. Instead of I am borrowing from you, I am selling this mobile phone to you for 50,000 rupees. I am selling this mobile phone for you for 50,000 rupees. Then you are purchasing the mobile phone. I am getting the 50,000. But I need my mobile phone back. I am making one condition. You do one thing. You don't sell my mobile phone to anybody else. After 1 month, I will repurchase my mobile phone from you for 52,000 rupees. You are also happy. You are happy. One thing, you can help me in this crisis. You can give me the money. Second thing, you don't have any problem of the trust because you got my mobile phone. Another thing, you are more happy. You don't need to find out any customer for this mobile phone. I will repurchase it for 52,000 rupees after 1 month. This transaction we call as repo transaction. Ready forward contract. A contract I am signing with you. I am selling this mobile phone to you now. I am ready to purchase and in future forward. Ready forward contract. I am ready to repurchase it from you after 1 month for a high interest, high price. For example, I am adding some 6% extra high for you. This is one way we can interpret this way. Another way we can tell this one, I am borrowing from you 50,000 rupees by giving you this mobile phone as a security. And I am offering you that 2,000 extra interest I will pay you when I am returning the money to you. I will pay you 2,000 extra interest and you should give me back my security collateral. Both are correct only. One way I'm telling, I am selling my mobile phone to you with a future agreement that I will repurchase for a higher price on a future date. Second thing I'm telling that I am giving my mobile phone as a security and I'm borrowing money from you. When you are returning my mobile phone, I will give you your money plus the interest rate. This is called as repo. Now, how repo functions is that, and how repo functions, 6.5% is the repo interest rate at present. How repo functions is that Reserve Bank of India. This is Reserve Bank of India, RBI. This is any commercial bank. This is the people or the market. Now, you see here, a commercial bank wants to borrow money from RBI. Listen to me carefully. Earlier, we have discussed bank rates. In the bank rates, commercial bank is borrowing money from RBI for long term. Here, commercial bank is borrowing money from RBI for short term, less than 1 year. A commercial bank tells the RBI, dear RBI, I want to borrow from you 100 crore rupees. A commercial bank tells that, dear RBI, I want to borrow from you 100 crore rupees. Then RBI is asking, the commercial bank is telling for short term, I want to borrow under repo. RBI has a problem. Dear commercial bank, how I will trust you? If you don't return the money, RBI will be in trouble. How I can trust you? The commercial bank is telling that already I have given 100 crore rupees loan to Government of India. Listen to me carefully. I have already given a loan of 100 crore rupees to Government of India. When I have given the loan to Government of India, government has given me security papers of 100 crore rupees. Security paper simply means, government security simply means that when a bank is giving loan to government is giving some paper verifying that from this bank we have borrowed this much amount of money, we will pay back after this much years. That it looks like a check leaf. You can understand a check leaf government is writing. It is to certify we have borrowed from you 100 crore rupees. Then our commercial bank is telling we have already lent 100 crore rupees to Government of India. That time Government of India has given us some 100 crore rupees government security. This security paper is with us. Commercial bank is telling, dear RBI, this security paper we will give to you. That means if we don't return the 100 crore rupees to you, you can take that directly from Government of India because they have already given us 100 crore rupees. The commercial bank is giving government security of 100 crore rupees to RBI. RBI keeps that government security. Now, RBI tells that you are taking from us 100 crore rupees by giving government security equal to that to us. What is our profit in that? We will charge from you 6.5% interest. This is called as repo rate. Repo interest rate. Now, why we call it as repo? Can I explain this in a different way? Repo is a transaction where commercial banks are selling government securities to RBI with an agreement that the commercial bank will repurchase the same government security from RBI in a future with additional payments. 6.5% will be additionally paid. In repo, commercial banks are selling government security to RBI. You can look on the screen and you can understand this is government security, how government security reached into a commercial bank, from government it came. And repo is a transaction in which commercial banks are selling government securities to RBI with an agreement to repurchase the same government security at a future date and time for an additional payment. That additional payment is 6.5% higher than the loan amount or the total money taken. In another way, am I correct? Repo is a transaction where RBI purchases government securities from commercial banks with an agreement to sell back the same into the commercial banks at a future date if commercial banks are ready to pay a higher amount. Now, another statement, repo means is a transaction where commercial banks are borrowing money from RBI for short term by giving government security as collateral to RBI for an additional interest. Yes, repo is a transaction where RBI lends money to commercial banks for short term by taking government security from commercial bank as collateral and with a interest rate. Is it also correct? Yes, all these are correct. That is, this transaction is called as repo. Now what happens? I hope that everybody understood up to here what is repo. Repo simply means the major difference between repo and bank rate is that bank rate and repo are almost same. The major difference in the bank rate, loan is given for long term. In the repo, loan is given by RBI to commercial banks for short term. In bank rate also, money flows from RBI to commercial banks, and repo also money goes from RBI to commercial banks. In bank rate for long term, repo it is for short term. In bank rate, there is no security. In repo, government security has to be sold by commercial banks to RBI as a security for the loan. Now coming to the market. Now if you understood the bank rate, it is easy to understand. If there is inflation in the market, what RBI will do? From 6.5%, they will increase the repo into 7%. When repo increases into 7%, our commercial banks will not borrow much money from RBI. As they have less money in commercial banks, they will not lend much money into the market. Money flow into the market will not be there. At the same time, as repo became very high, commercial banks will reduce the interest rate for depositors. Those who want to deposit the money, earlier they were giving only 6% interest. Then they will give now also, earlier they were giving, for example, 5% interest for the depositors. Now they will give 6.5%. Then also commercial banks are in profit because taking money from RBI, it goes into 7%. Then people will be interested. They will deposit money with the RBI. When people are they will deposit money with the commercial banks. When people are depositing money with the commercial banks, money supply in the hands of the people contracts. Then inflation will be controlled. When there is deflation, if RBI sees that there is deflation in the market here, deflation is there, then what RBI does? RBI decreases the repo rate from 6.5% to 6%. Then commercial banks are borrowing too much money from RBI. When they are borrowing too much money, they are giving too much loan to the people for a lower interest rate. That will increase the money supply in the market, and the problem of deflation will be solved. Again, when they are decreasing interest rate for the loan, they will decrease interest rate for the depositors also. People will not deposit the money here. Got it? How repo also helps in controlling monetary policy. Now you tell me again, when there is inflation and deflation, what happens to repo? During inflation, repo increases or decreases? Increases. During deflation as a solution, repo again decreases. Easy to remember. Bank rate during inflation increases, during deflation decreases. Bank repo during inflation increases, during deflation decreases. Increasing bank rate and increasing all the things, we call it as the contractionary monetary policy. Yes or not? Increasing everything. Decreasing means that expansionary monetary policy. Now with this logic, and during inflation, RBI wants to follow an expansionary monetary policy or contractionary monetary policy. And during inflation, solution is contractionary monetary policy or the expansionary monetary policy? Contractionary monetary policy. During deflation, solution is contraction or expansion? Expansion. Then during inflation, whenever RBI wants to follow contractionary monetary policy, repo rate and the bank rate should increase or decrease? Increase. When RBI wants to follow expansionary monetary policy, and bank rate, repo rate will increase or decrease? Decrease. You have understood now? Yes. Now coming back into that, we come back to the material. I can give you a brief on the repo. Plus, we can discuss the reverse repo as well. After finishing repo and reverse repo, both of them together, then we can go ahead with the material. Coming to reverse repo now. This is repo, and repo already we discussed. Let me give you a brief on the repo first. RBI lends to the banks as the security of government as collateral. That is called as repo. Banks repurchase the security overnight or after a few days. RBI changes repo rate for the money it lends regularly. Presently, it is 6.5%, not 6.25, and 6.5% is the present repo rate is 6.5%. Now coming into the reverse repo. Let us go back into the same thing. Reverse repo is how much is the reverse repo at present? Let me see in the Google. Reverse repo is 3.35. Now see that how reverse repo functions. This is RBI and this is commercial bank and this is the people. Then RBI here, commercial bank, and this is the market or the people, whatever we can experience inflation or deflation. Now see that sometimes RBI is borrowing money from commercial banks. Whether RBI needs money. Why? RBI itself is money only. RBI prints money. Then why they need the money? Yeah, RBI does not need money, but sometimes they want to take the money to control the money. It is not about RBI also in crisis. Then we are all of us will be in crisis only. RBI itself is the richest institution in India will be. RBI, they have the power to print it. Now imagine, for managing money in the market, RBI wants to borrow. For a short term, RBI is asking commercial banks, we want to borrow money from you for a short term. And commercial banks are telling that, okay, when we wanted to borrow from you, you wanted government security, give us some security for us as well. Then RBI also will have a lot of government security, whatever money they have lent. RBI has an instrument called as Ways and Means Advance. You will learn later WMA. Under Ways and Means Advance, RBI also used to lend the money to government of India. And RBI has also government security. RBI borrows money from commercial banks. RBI borrows money from commercial banks. When RBI borrows, RBI has government security here. How RBI got the government security? RBI has given loan to government of India. Imagine RBI wants to borrow from commercial banks 100 rupees. Then RBI will give the government security will move into the commercial banks. By giving government security, RBI borrows money from commercial banks. The commercial banks are demanding that we also need an interest rate. When we borrowed from you, you charge a repo rate. We also need an interest rate. This is called as reverse repo rate. 3.35% is the present reverse repo rate. Now here the point is that, and all of you understood this, reverse repo, if I am telling a statement that reverse repo is a transaction where RBI sells government securities for commercial banks with an agreement that RBI will repurchase the same security from commercial banks with an additional 3.35% interest rate. Is it correct? Online students, is it correct or not? I became a little bit faster because I have also to take out from my mind. If I go slow and sometimes my concept will go wrong. Same way, in another way, listen to me carefully. And if I am telling that reverse repo is a transaction where commercial banks are purchasing government securities from RBI with an agreement that they will resell the government securities to RBI for an additional 3.35% interest rate in future. Yes, reverse repo is a transaction where commercial banks are borrowing money from RBI for an interest rate of 3.35%. Is it correct? Yes or no? Online students, reverse repo is a transaction where commercial banks are purchasing commercial banks are borrowing money from RBI for a 3.35% interest for short-term period. Is it correct or wrong? Wrong, because that is repo's definition. Reverse repo is a transaction where RBI borrows money from commercial banks for an interest rate of 3.35% and for short term. Another one, reverse repo is a transaction where commercial banks are lending money to RBI for a 3.35% interest for short term. Yes. Now, if there is inflation in the market, please tell me whether reverse repo will increase or decrease. If there is inflation in the market, whether RBI should increase the reverse repo or not? D or I? Online students can also type I or D. If there is, Alisba Ahmed, Aniruddha, you are correct. And Sunram Murmu, correct. Abhijit Konwar, correct. And Sandeep, correct. Everybody is correct. Here, you tell me how many of you want to raise the hands for I? Increase. How many of you are telling decrease? Increase is the correct. How increase? See, come to the point. And when there is inflation, what is my question? When there is inflation, will RBI increase the reverse repo rate or not? Now imagine what will happen by increasing. There is inflation. RBI increase the reverse repo rate into 4.4%. When RBI increases into 4%, commercial banks are interested to give the money to RBI because they are getting high interest. Earlier, they were getting only 3.35% interest when they are lending money to RBI. Now, commercial banks are getting 4% interest from RBI. They are more interested to give the money to RBI. When they are giving available money to RBI as a loan, they have less money to give to the people. When they have less money to give to the people, they will increase the interest rate or they will decrease the interest rate. When they have less money and they will increase the interest rate or decrease the interest rate, they will increase the interest rate. When they increases the interest rate, people will not take the loan. Another thing, RBI feels that they are getting high interest rate from RBI and they are depositing money with RBI, then there is a chance they can take more money from the people and deposit RBI, earn more interest. Then to motivate the people to deposit with the commercial bank, they will increase the interest rate for the people who want to deposit also. Then more money will flow from here to here and no money will flow from here to here. Inflation can be controlled. Contraction of money supply will happen. Agreed or not? If there is inflation, then reverse repo rate will also be increased by RBI. By increasing reverse repo rate, RBI can motivate the commercial banks to deposit more money. Commercial banks to deposit more money with RBI. By depositing more money with RBI, they will have less money lent to the people, then they will increase the interest rate for the people, and they want to collect more money from the people. To motivate the people, they will increase the interest rate for them. Then the contraction can be done. Now, if there is deflation, in the market, imagine, if there is deflation in the market, RBI will decrease the reverse repo rate into 3%. When RBI decreases the reverse repo rate, commercial banks are thinking that now, earlier they were giving good interest rate and with RBI, now they are giving less interest. Why we should invest with RBI, deposit RBI, that is give to the people only. They will reduce the interest for the people and they want to give more loan to the people. When they are reducing interest rate, more people will take the loan from commercial banks. It will expand the money supply in the market. When they are feeling that now no point of taking money from the people and depositing with RBI, RBI gives a very less interest rate, low interest rate, then commercial banks will reduce the interest rate for depositors. People will not deposit money with RBI. Money supply can be expanded. Yes or not? Yes, online students, yes or not? Please raise the hands. And if you understood, then again our task is very easy to memorize. During inflation, now coming into reverse repo, and coming into reverse repo, tell me, during inflation, reverse repo increases, During deflation, reverse repo decreases. If RBI wants to follow contractionary monetary policy, then reverse repo increases or decreases? Increases. If RBI wants to follow expansionary monetary policy, reverse repo increases or decreases? Decreases. I hope all of you understood. Reverse repo rate and 3.35, any of you have not changed the reverse repo rate. Reverse repo when RBI borrows from the commercial banks, presently the interest rate is 3.35%. Now how repo rate functions? Anyway, it was 6.5 and I prepared the PPT long a little bit back, then 6.25 came. 6.5%. When there is inflation in the market, inflation means there is money. When there is inflation, what RBI does? RBI increases the repo rate. When RBI increases the repo rate, obviously, and commercial banks, because there is a repo rate is the interest rate charged by RBI. When commercial banks are borrowing from RBI, commercial banks will not borrow from RBI. They want to borrow from the people. To borrow from the people, they will increase the interest rate for depositors. Then depositors will deposit money with the commercial banks. Money will reduce the contractionary monetary policy. Inflation can be controlled. When there is deflation in the market, RBI will decrease the repo rate. When RBI decreases, the money in the RBI, commercial banks will borrow from commercial banks. It will go into the market, will expand the money supply in the market. Now coming into the reverse repo, same thing, only money during inflation means money is there in the market. During inflation and from 3.35%, RBI increases into 4%. When RBI increases into 4%, commercial banks want to deposit money in the RBI. For that, they want to collect money from the people. Then to collect money from the people, they will increase the interest rate. Collecting money from the people, money comes to commercial banks, from commercial banks to RBI. During deflation, RBI, commercial banks have the money. Either they have to give here or they have to give there. During deflation, RBI decreases the reverse repo rate. That means while giving here, less interest rate will be earned. Then to earn more interest rate, commercial banks will deposit the money there. Money will go to the market and will solve the problem of deflation. This is how repo and reverse repo functions. Can you come to the material and quickly we can go by the material. Ready forward contracts or repo, right of purchase. Right of purchase means while purchasing government security, what interest rate has to be paid. Definition: a transaction in which two parties agree to sell and repurchase the same security. All of you understood? Seller sells with an agreement to repurchase the same at a mutually decided future date and price. Buyer purchases with an agreement to sell the same to the seller at a mutually agreed future date and price. RBI lends to the banks as the security of government as collateral. It is called as a repo. There's a spelling mistake, I think. Repo. One extra R came. Banks repurchase the security overnight or after a few days. RBI changes a repo rate for the money it lends regularly. The repo rate at present is 6.5%. Reverse repo when RBI borrows from the banks. Reverse repo at present is 3.35%. Repo and reverse repo only are done in Mumbai, because RBI headquarters in Mumbai takes the decision on repo and reverse repo only in securities approved by the Reserve Bank of India. Treasury bills and only the securities approved by Government of India. Treasury bills, central and state government securities, the reverse repo can be done.